G'day folks, welcome back to Pete's Investing. It's March 8, 2024. This is the high-grade copper technical analysis. We're still trading in a channel, longer term, although we do hit a slight bearish reversal in play, so just keep a lookout for that. In terms of the latest high-grade copper news, copper prices approaching key resistance levels on a surge in Chinese demand. Record-breaking copper imports in the first 2 months signal a rebound in consumption after Lunar New Year, fueled by green energy sectors and a potential production cuts aimed at boosting ore processing fees. Despite lingering concerns from the property slowdown, the overall outlook for copper remains bullish. So what I've got here is the weekly, daily and hourly charts. And on the weekly, first off, you can see there the ADX 25 is still showing a bullish momentum. Likewise on the daily and the hourly. On the CCI 150, which is our divergence indicator, there is no divergence currently on the weekly. On the daily, no divergence currently, but there was a that wasn't a divergence actually. I would delete that. That's a mistake. So no divergence on the daily as well, but on the hourly, we did have a bearish divergence here on that declining lower highs on the CCI versus higher highs in the price. And if I zoom into that, you can see there we drew a target area represented by that rectangle, and that hit our target, fell below that. And the way we measure that target area, for those new to the channel, we draw Fibonacci to the previous low before that divergence started. That's why we take it to there, not there. And that was measured by that 23.38% level. Likewise, back here we had a bullish divergence on the CCI versus lower lows on the price, and that bounce hit our target, bounced back down, then broke through and retraced higher. In regards to the Fibonacci, so I just want to explain something as well, again for those new to the channel. We look at, you can see there hit a target at 23.38, bounced down then and broke up again, and then eventually rested near the 61%. Now you'll notice there it started bouncing down. It sort of thought about, should I penetrate that 61 or not? That's a key area. So what it eventually does, once it actually breaks through beyond that 61%, then the trend is generally reversed. So you can see there it actually broke higher and coming close, and then it hit this resistance, which we drew as well. And then we had this bearish divergence. And again, on that divergence, if I redraw that Fibonacci between that low and that high, you can see there it came close to the 50%, but it didn't penetrate the 61%, and that's always a key area. So generally, if it's within that 61%, it can bounce from any one of those levels, and it did so just below the 38 and just above the 50% level. Actually, yeah, it didn't quite reach this 50% and bounced higher. So again, there's no divergence currently in play. Let me just have a look at that in detail. So yeah, there's no divergence. That's moving in line with the price. So no divergence currently on that. So as a trading idea, what I've got here, this is the daily chart, and I've got two 1 hour charts here. This in the green is the average down approach, and in pink or red is the stop loss approach. And just to zoom in on one of them, the first one of the rules is we trade long when I've got a Heikin-Ashi chart here. So when the Heikin-Ashi is green, we go take long positions only, and when it's red, we take short positions only. That's one rule in amongst a rule I'm going to explain. So the main rule is we trade on the hourly time frame or a lower time frame based on the daily, and you can apply this to almost any instrument. So if you're trading on the daily, for example, you'll apply it based on the trend of the weekly. So what I've got here, and you can see there on the back test, if I zoom out here, it starts at that point, and that's specific to the point where the CCI 150 breaks above this band of moving averages. And I've got that, how to build that in the description below in one of the videos. So you can see there it breaks outside of that band, and that's where you take your first long positions. So you can see there on the two right side charts, on the green, start trading there that's the average down approach, and this one is the stop loss approach. And you will stop taking trades when the CCI breaks inside this band. So you can see there, you would have been in a trade holding a parcel of shares or contracts on probably both of them. So you let them both run until the trade executes and completes its strategy. And again, the strategy is at the end of the video. Just wait for those two slides and how to enter and close properly and the entry parameters. But you close out the trade and let it ride. So you don't trade when it's within this band. So at that point, you can see there on the average down approach, it would have generated $166 approximately. Actually, you would have let it complete that trade, so you would have completed it there. That generated 784, and on the stop loss approach, the chart on the right, that was in the red, so it dropped by about $250 odd. Now, I've got another bearish back test here to demonstrate. What do you do when it's in the opposite direction? So again, using this back test, so you can see there, let's zoom out on this one as well. At that point there, on both the average down and the stop loss approach, you take short positions when the CCI drops outside of the moving average band below. At that point, you can see that's where it starts trading, and you stop taking short trades when it enters into the moving average band there. You do not trade when it's in that moving average band. So you enter the short positions there and stop taking the short positions back there. So you can see there, approximately 827 using the average down approach on the chart in the green, and you're up $208 on the stop loss approach, the pink chart on the right. So again, just stay to the end of the video to watch the two slides and demonstrate the rules. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.